My name is Aman Chugh, and in case you wish to look at my detailed profile, you could visit www.amanchugca.com, which is amanchugca.com. In my video number 1, I had explained that the world's GDP is approximately around $70 to $75 trillion and has been growing at an average pace of around 3.7%, and we expect that the world's GDP would be growing by around 4% in the years to come. But I also mentioned that this GDP growth has been possible because of the highly leveraged position across the world economies, which means more and more of borrowings, more and more of debt, and the debt to GDP ratios across the world major economies has risen phenomenally, which includes China. And China's debt to GDP ratio has risen from 175% of its GDP to almost 300% of its GDP. The total debt of the world is approximately $233 trillion, which is approximately 300% of the world's GDP, and China leads the way. And in fact, China wants to deleverage their situation. That means they wish to bring down their debt to GDP ratio further down. But now, in fact, they had realized this in early 2015 as well. Mr. Premier Lee, he had realized that the debt to GDP ratio of Chinese economy needs to be delevered, for which he made a point that the deleveraging should start by passing on the leverage stuff from the corporate into the household sector, which means he had stressed upon more of IPOs, initial public offerings, or more of follow-on public offerings. He also stressed upon more of debt to equity swaps, which means that the over debt taken by the corporates are ultimately converted into equities, so that the equities can be bought by the household, and hence in a manner the leverage position of the corporates is being passed on to the household sector. China has one of the worst leverage position for the corporate and the household sector if we look in terms of emerging market comparison as well. The leverage position for the corporate is around 170% for the corporates and around 50% for the household sector, and Premier Lee wanted this deleveraging to happen in 2015. However, in 2015 such hopes were dashed because Chinese economy went into a slowdown and the Chinese markets crashed, which we saw some of the repercussions were also being seen in Indian Sensex and Indian Nifty, wherein our Sensex level touching a high of around 30,000 in March 2015 went back to a level of almost 25,000 in February 2016 because of the Chinese challenge. China wanted to deliver, but they could not deliver, and why they could not deliver, that was because of the share market which fell down. As of now, again, this year it is expected that China again would like to initiate or re-initiate their steps of deleveraging, because it is very necessary for China to deliver because they are already standing at a highly leveraged position. And the stock markets also looks very good in terms of for the public sector enterprises or the corporates to deliver by moving from debt to equity swaps through raising of IPOs or FPOs. Also, one of the major challenges for Chinese economy is that many public sector enterprises and corporates who had taken more of debt in order to do expansion activities, they did not invest in the right direction, in the right manner for the infrastructure development, but rather they invested in some of the other activities which has not led their GDP to grow as much as they had taken the debt. And since now, because of the deleveraging strategy by the Chinese premier and moreover US expectation of raising the interest rates, if China has to increase the interest rates, and we could also see that Chinese bond yields are rising, which means if the interest rates of China rise, there might be further defaults in the corporates and the public sector enterprises of Chinese economy, which is a bad symptom of the Chinese economy altogether. Although China has been silently diversifying from its over concentration on manufacturing sector towards the services sector, because services sector do not require much of leveraging. So ultimately, I expect that although China is silently moving from manufacturing sector into services sector, but still, if because of the deleveraging strategy which is their agenda in 2018, if they do so and the interest rates rise further, there could be further defaults which could be seen in the Chinese economy, which would hit to such an extent in a limited manner Indian economy's markets as well. Hence, hence the talk of the 2018 about whether the markets will crash or not. Well, while the world's GDP is growing, and for the first time the world's major economies are growing together, which was not the case in 2008 or in 2012 or in 2013, because in 2013-14 European crisis were there, and in 2008 US crisis was there. So presently all these economies are rising and have been recording positive GDP figures, but the concern is the deleveraging situation of China and the concern of growing inflationary pressure in US, which could lead to the rise in the interest rate in US, which could lead further rising of the interest rates in other economies who would like to match the interest rate differential with US as well. I hope you would have been liking the videos which I have been floating across, and I would be further floating further videos as well for you to see. But I would request, if you have not subscribed to my channel, I would request you to press the button of subscribe so that the further videos also they reach at your doorstep. If you feel that these videos are good for the community and increases the knowledge in one aspect or the other, I would request that you could further share these videos in your friend circle as well. So I would be recording few more videos in the times to come. Till then, thank you very much.